Hello, welcome back to Learn Oikonomia. In this video, we are going to discuss the concept of nominal effective exchange rate, and we would also discuss how does this nominal effective exchange rate become essential. So let's go to the video. Coming to the concept of nominal effective exchange rate, it could be seen that this is an unadjusted weighted average rate at which one country's currency exchanges for a basket of multiple foreign currencies. For example, if you take the case of Indian rupee, so that is a currency that we use for official transaction purposes. So when we adjust or when we take the weighted average of our rupee in terms of a basket of currencies. For example, if the basket consists of US dollar, Japanese yen, Chinese renminbi, etc. So we are actually going for the weight average of our currency in terms of this basket of currencies. So that's about this nominal effective exchange rate. Now coming to the concept of nominal exchange rate, we can see that this thing could be something which could be measured in terms of a foreign currency. Earlier we have taken the example of a basket of currencies, but if you take the case of Indian rupee and US dollar, you can see how much of Indian rupee you have to give to get one US dollar. So this is a nominal exchange rate. So it's the amount of domestic currency needed to purchase a foreign currency. So how much of Indian rupee should be equivalent to one US dollar? In the case of the subject of economics, we could see that this nominal effective exchange rate can be considered as an indicator of a country's international competitiveness in terms of foreign exchange market or forex market. So that means that if you need to pay more of Indian rupee to get one US dollar, that means that the value of your currency has become less. But if you have to pay only less number of rupees to get one US dollar, that means that the value of your currency in the international market, the value of Indian rupee in the international market is gaining, right? So this nominal effective exchange rate could be adjusted in order to compensate for the inflation rate of the home economy or the home country in relation to the inflation rate of its trading partners. If you are trading with the US, you are actually compensating for inflation in the case of India with the inflation in the US. If you are trading with China, you are compensating for the inflation rate in India relative to the inflation rate in China. So in that manner you are doing, right? So the resulting figure, it is known as the real effective exchange rate. Why it is not a real effective exchange rate? Actually, you are taking into consideration the sustained increase in prices in the economy. You are taking into consideration the inflation rate in the economy. So you are actually making adjustment. You are adjusting for inflation. So that is why we refer to this as a real effective exchange rate, right? So unlike the relationship in a nominal exchange rate, near or the nominal effective exchange rate is not determined for each currency separately. As I have already told you, the nominal exchange rate is something that it's that when we consider the value of our currency in terms of some other foreign currency. But in the case of nominal effective exchange rate, we consider the value of our currency in terms of a basket of currencies. So this is the difference. Here, one individual number, typically an index, expresses how a domestic currency's value compares against multiple foreign currencies at once. That's the difference. So, if your domestic currency, if it increases against a basket of other currencies inside a floating exchange rate, then you can see that your nominal effective exchange rate is appreciating. If the domestic currency falls in the basket, or if it falls against a basket, you can see that it is depreciating. That is, nominal effective exchange rate is depreciating. Now you can answer the question, what does the nominal effective exchange rate tell you? So what does it tell you? So just try to answer, you can answer it. So here it is something we have already seen that it is something when we look into the value of our currency in terms of basket of currency, and the nominal effective exchange rate describes the relative value. It doesn't tell anything about whether a currency is strong or if it is gaining or it is gaining strength in real terms. So because we are not taken into consideration the rate of inflation in the economy when we are going for the nominal effective exchange rate, it only describes whether a currency is weak or strong, or whether it is weakening or whether it is strengthening as against the foreign currencies. As with all the exchange rates, the nominal effective exchange rate would help you to identify certain currencies which could be used as a store of value more or less effectively. These exchange rates can influence whether influenced by international actors buy goods buy or sell goods and services in the international markets. This is because we know that we are actually living in a world where globalization is gaining importance. The world is connected. That means that all the countries are connected. We are acting in a single world. We are trading with different trade partners. We are actually selling our services. We are getting services from different countries. We are selling services to different countries. We are selling goods to different countries. We are purchasing goods from different countries. So the world is actually connected. In this scenario, we have to go for transactions with interrupee with some other currencies, or the currencies or the countries, the currencies of the countries in which we are trading with, right? So which we are trading, right? So it is used by foreign traders who engage in currency arbitrage, etc. So what is this? You arbitrage means you are buying currency at a lower price and you are selling it at a higher price. You are by purchasing currency from a market where the price is less, and you are selling the currency in a market where the price is high. So here the difference is your profit. The difference between the price at which you are buying and the price at which you are selling. So here is a profit. That is a profit for the persons who are involved in arbitrage process. You can see that the Federal Reserve calculates three different national nominal effective exchange rate indices for the United States. These are the broad index, the advanced foreign economies, and the emerging market economies indices. The baskets of foreign currencies, coming to the explanation of the same, we can see that every nominal effective exchange rate compares one individual currency against a basket of foreign currencies. Here, this basket, what all currencies would be included in the basket? So this is a very important question to answer. Here, the basket is chosen based on the domestic currency, its most important trading partners. So if it is trading with US, China, Russia, etc., then so if you're actually trading with the US, if you're trading with China, all these kinds of things, then your basket would be consisting of the US dollar, the Chinese renminbi, etc. The world's major trading currencies, so these are the US dollar, the euro, the British pound, Japanese yen, Australian dollar, Swiss franc, South American rand, Canadian dollar, etc. So the value of the foreign currencies in the basket, these are weighted according to the value of your trading partner, the value of the currency of your trading partner. Okay, and this could be depending upon your imports and exports. From which country are you importing, to which country are you exporting, or to which all countries are you exporting to, or from which all countries are you importing. So the weights often relate to the assets as well as the liabilities of different countries as well. Now, a higher nominal effective exchange rate coefficient, that means that if the coefficient is above 1, that means that the home country's currency is worth more than the currency of the imported country. And the lower near coefficient, or lower near coefficient means the lower nominal effective exchange rate coefficient. That means that if it is below 1, then The home country or the currency of the home country is usually worth less than the currency of the imported country, and there is no international standard for selecting a basket of currencies. It depends upon each and every country, because the trading partner of each and every country is different, right? The Organization for Economic Cooperation and Development basket is different, and this is different than the basket for the International Monetary Fund, or the basket of the Federal Reserve, or the basket of the Japan, or of the basket of the Bank of Japan. Here we can see that many different institutions rely on the international financial statistics, which is published by the International Monetary Fund. So that's all about today. I think you get some idea with respect to the the nominal effective exchange rate, as well as the real effective exchange rate, and also you might have understood about the difference between simply the nominal exchange rate and the nominal effective exchange rate. So that's all for today. Please like, share, and subscribe to this channel for more videos, and you can be a part of my Telegram group as well as Telegram channel to discuss your doubts. I'll be providing the links of these in the description box so that you can join from there. You can pick it from there. So that's all for today. Thank you.